Hello friends, welcome to the mini marathon of module C for ABM. Yesterday's mini marathon for module A was a great success. All of you watched it heavily. Those who have not, kindly go through the video again. I have taken many important theory as well as numerical questions. Today also I will be covering some numericals, some theory. Tomorrow also it's there. See, it's a series. Yesterday module A, today module C, then PYQs, previous year questions, then numericals, then Mahamarathons, then revisions, then you'll have your final paper analysis, everything is lined up. Plus Chalisa, most important paper. So many programs are lined up. So kindly note, subscribe to the channel, click on the bell icon. Okay, don't miss this. Because if you click on the bell icon, you'll get the updates. Right? So let's start with module C mini marathon. Today I'll be covering, as I told you, theory questions as well as objectives. Okay? Various objectives and theory questions. So let's start. Which of the following tools or techniques for financial statements is also referred to as pyramid method? Which of the techniques is also referred to as pyramid method? Now this is the bouncer for many of you, right? Which of them? Funds flow, cash flow analysis, common size statements and trend analysis. So which of them is known as a pyramid method? Yes, everyone. What is the answer? Which of them is known as a pyramid method? Very difficult one. Yeah. Yes. Is it this funds flow or is it cash flow? Is it funds flow or cash flow? Is it so? So the real answer is, what did you get? Let me see the comment section. The pyramid method is always D, trend analysis. Trend, studying the trends is known as pyramid method. Okay? What do you have in pyramid method? See, pyramid means what basically? You are basically calculating the different items, ratios for various periods. So trend means what? What do you study in trend? In trend you study what was it for last year, then this year, for this year. Like this you go on comparing for last 3 years. That is known as pyramid. Okay? So in exam if they ask you pyramid method, kindly note it's trend analysis. Okay? Which of the following is not included under coverage ratios? Coverage. So which of them is not included under coverage ratios? Capital gearing ratio, debt service coverage ratio, fixed charges coverage ratio and interest coverage ratio. So which of the ratios is not included in coverage ratios? Now what is coverage ratio? Coverage means which can cover my EMI. Suppose here there are various coverage ratios. First one is, let's say, DSCR, debt service coverage ratio, means whether that customer will be able to repay my installment in the next year. Only next year. That is DSCR. What is ICR? Interest coverage ratio, whether the customer will be able to repay my interest. Similarly, this fixed charges, whatever are my fixed charges, legal charges, whether the customer is able or does he or she have the capacity to pay those charges. So that is all considered under this ratios, coverage ratios. So which one is not there? Let's see one by one. Capital gearing ratio. So capital gearing ratio means what? This you can call it as debt equity ratio. Debt equity. Capital gearing. what is my loans from outside, okay, upon what is my loans from inside, my own money. How much loan have I taken from the bank and how much money I am having on my own. So that ratio is known as capital gearing ratio. Okay. Next is debt service coverage ratio. This I've already told you, but look at the formula. Okay. Profit plus depreciation plus interest on long-term loan upon total EMI plus interest on long-term loan. So that is taken over here. DSCR means profit plus depreciation plus interest on long-term loan upon total EMI plus interest on long-term loan, right? So that is DSCR. What is fixed coverage? Fixed charges. See, fixed charges means NPAT, net profit after tax, plus interest expenses, plus lease expenses. Look at this, charges, whether the charges the customer will be able to repay. So NPAT, net profit after tax, plus interest expense, plus lease expense, the whole upon. Look at this, again these two are added. Interest expense, plus lease expense, plus long-term debt retired, okay? Plus long-term debt retired. Retired means which have been repaid. Plus preferred dividend. So these are all added under fixed charges coverage ratio. See, this ratio is new one. It is not there in the books. Okay? It's not there too much in the books. But you have to look at it. Kindly write down the formula which is given. Okay? Write down the formula given over there. Okay? NPAT plus interest expense plus lease expense upon. These two are again added. Interest plus lease expense plus long-term debt retired plus preferred dividend. Write down this formula. And last one, you know, interest coverage ratio. That is used for your CC. EBIT, earning before interest and taxation, upon interest on long-term loan. So it's very simple. EBIT upon interest on long-term loan. Okay. So which of them is not there? So capital gearing ratio. The answer is A. This is not covered in the coverage ratios. So it is capital gearing ratio. A is the answer. Kindly note. The answer is A. Okay. This one is the answer. Not included. Okay. Got it? Next, look at this. This is a sort of case study. A salesman collects a survey on feedback of the product from every fourth customer. So he selects the first customer to be surveyed randomly, and after that every fourth customer is surveyed. What type of sampling is he doing? Now see this. This is the important chapter which you have, sampling distribution. Okay? Roughly third chapter. Okay? Second chapter. It's there. In this, kindly note, what are the various ways of sampling? There are 4 ways of sampling. Systematic, stratified, simple random and cluster. So these 4 are only there. These are called as probability sampling. There are also non-probability sampling. That is separate. That snowball sampling is there, convenience sampling is there. That we won't touch it today. But these 4 are probability sampling. One of them, at least 2 of them are asked to you in exam. So now, if somebody is collecting, see what am I doing over here? If I am the salesperson, what am I doing? First person. Then 1, 2, 3, leave it. Second person. 1, 2, 3, leave it. Again third person. Same thing. 1, 2, 3 and fourth person. So what am I doing? I am collecting every fourth person, or I am interviewing every fourth person. So what is this method called as? In the comment section, everyone. This is known as systematic sampling. Systematic. Okay? Understand the difference between all these. Systematic means sequentially, with a proper order. Stratified means what? Stratified sampling. This creates differences, means 40%, those students with 20% marks, those students with 40% marks, those with 60%, 80%, like this. We make separate groups. That is stratified. Simple random means what? Anything. I'll close my eyes and select any 10 students. Here, I'll just move out and select. That is simple random. Cluster means what? Generally, cluster is followed for regional differences or regional bifurcation. Students from Goa stand on this side. Students from Maharashtra stand this side. Students from Tamil Nadu stand here. Kashmir stand here. So regional. Okay. So got this point? The answer over here is systematic sampling. A research associate has conducted a survey for around 1500 families with respect of their water consumption pattern during the month of April. Now he wants to quickly summarize the large amounts of data collected by him using spreadsheet. Which feature among the following should be used? So now, macros, pivot table, mathematical functions and logical functions. Now he wants, what has he done? He has done a large survey. In fact, I'll give you an answer, E. All of them. Okay? E is the answer. E, I've given this option. Check this. He has conducted a survey of 1500 families. So he'll have a large data now. 1500 is a big number. Analyzing that large data is very difficult task. Okay? So he wants to quickly summarize the large amounts. Okay? Quickly summarize the large amounts. Quickly summarize the large amounts. So which feature among the following should he use? So if he wants to summarize the large data, he must use macros, pivot table, mathematical functions or logical functions. In fact, E is the answer, all of them. Because what you will be needing when, you don't know. And all these are important functions. Macros, okay, macros is for repetition. Whenever you have to repeat certain function constantly or certain process constantly, you will use macros. Pivot table, this is like the benchmark table, pivot. This is used everywhere. Copy, just you have to copy this table and put it everywhere. So that is pivot. So you can use this also. Mathematical functions, you know it, plus, minus, whatever, additions and whatever big functions are also there, logarithmic and everything. And logical functions. So all of them should be used, isn't it? So the answer is E, all of them. Prudential guidelines on income recognition, asset classification and provisions were introduced by RBI on the recommendation of which of the following committee? So income recognition, prudential guidelines on income recognition were introduced on the recommendation of which committee? Rangarajan committee, Chakraborty committee, Deepak Mohanty committee or Narsimham committee. So because of which committee were they introduced? Very important committee this was, very important. Yeah. Think. Yes. This committee made major changes, okay, in the banking. What was it? Yeah, it was which committee? This committee was one of the major committees in the banking system. Think, which was it? It's very famous committee, very famous. It's the base of your modern banking. It is the base of your modern banking and it is Narsimham committee. Okay, Narsimham committee. In fact, there were two Narsimham committees, 91 and 98. Two Narsimham committees were there and both the Narsimham committees gave very good recommendation. Because of 1991 committee, our country, we brought the private banking. All these new private banks which you see, HDFC Bank, ICICI Bank, because of this 91 Narsimham committee, they have come in. Then in 1998, again Narsimham committee was set up. and it gave the freedom to insurance sector. Okay, means the major changes in the insurance sector, airlines were made in 1998, and that was given by Narsimham Committee too. Okay, so all these guidelines were brought because of this Narsimham Committee. The outstanding balance in the account based on drawing power calculated from stock statements older than dash would be deemed as out of order. Oh, very important. So, outstanding balance. So, basically what does it mean? What is the period above which the stock statement submitted by the customer or the stock details submitted by the customer are outdated? Simple meaning. What should I consider? Suppose if I give you a stock statement tomorrow and that stock is 2 years old. So, is that stock of any use to you then? If it is 2 years old, it means what? If some stock is 2 years old, it means that stock is dead stock, right? That stock is dead stock. So, it's of no use to you, isn't it? So, which one? What is the criteria? From where do I say this stock is of no use? Is it for 1 month, 3 months, 6 months and 12 months? It depends. See this. Again, every bank will have a specific criteria of their own. But generally, what is accepted in bank? Generally accepted in bank is 6 months. Up to 6 months, you can consider the stock as okay type. But again, it depends on the business. Suppose if I am having a vegetable vendor, 6 months stock is of zero use to me. If I am an agriculturist, I am a farmer, then 6 months stock, I am having onions, 6 months stock is of zero use to me. That's why I said, depends on the company and the bank, specific bank's guidelines or board of directors directives. But generally it is considered as 6 months. Okay. Next. Among the below mentioned, which of the following is correctly matched? Correctly. Look at this. Now look at this. The point over here is you might be feeling that all of them are correct. Executive director, the role, or this independent director, internal control. But you must know, here we have to match the following. Okay, it may be this and this may not match. So this is what you have to check. So executive director means member of the board who does not have management responsibilities within the bank. Okay, so member of the board who does not have management responsibilities does not. He is an independent sort of means this director is sort of he is not directly liable to the management. Independent director, executive member of the board who does not have management responsibilities. Again the same. Internal control system, a set of rules and controls governing the bank's organizational and operational structure, including reporting processes and functions for risk management, compliance and internal audit, and all of the above. So which of them is correct? Do you mean to say that executive director does not have any responsibility? Independent director does not have any responsibility? It can't be the case. Okay. When you are on the board of directors of any company or any bank, whenever you are on the board of directors of any bank, you always have a responsibility. Okay. Whatever decisions you do, you give, will affect the overall banking. Okay. So that's why executive director, independent director, these are false. And this one is true. Internal control system, a set of rules and controls governing the bank's organizational and operational structure, including reporting process and functions for risk management, compliance and internal audit. Now this is so true. What do you mean by internal control? Internal control means I'll always focus on 2-3 parts. One is compliance, second is business. So leave aside business. Right now we are not discussing business. So compliance. Compliance will be what? Compliance will be related to your internal board of directors policies, BOD policies or SOPs, plus your regulatory body means RBI. will have to follow the compliance in these two parts. Plus any other body, means RBI is not only RBI, it can be some, you can have the compliance related to SEBI also, you can have the compliance related to IRDA also. So all the bodies. So internal control means what? It is having the set of rules and controls governing the bank, organization and operational structure. Again, operations. So here you have to see to it that the compliance material or the compliance process is followed by the staff also. The staff needs to be well educated about this, trained about this. Otherwise, having the compliance only on paper is of zero use. Got it? Having the compliance only on paper is of zero use. So reporting process. Nowadays we have all this online reportings. Okay? RBI has also made online reportings under various platforms now. For risk, which was not the purpose of enactment of Insolvency and Bankruptcy Code 2016. So these are ABCD options. So Insolvency Code was not, see this, not the purpose, not the purpose, not the purpose, okay, for enactment of insolvency. Means why was this IBC Act? See, IBC means what? This chapter mainly relates to your last chapter, resolution of stressed assets and IBC. Why was the IBC brought in? First you tell me, why was in this Insolvency and Bankruptcy Act 2016, it was given, na? Yeah, 2016. It was brought in 2016. Why? Because to solve major problems in the banking, very large loans were like hell. Many companies had run away, right? You know that Kingfisher Airlines and that second one, Nirav Modi, all these guys, right? So that point, after that, this insolvency and IBC was brought in. Under this, now nobody can run. Okay, IBC is one of the best options. Very fast, speedy, very speed. You follow the lecture of mine on this, okay, in the paid classes. It's a perfect timeline. So and so, so and so, so and so, so and so. That's it. And the case is resolved in this hardly 270 days. Okay, within 1 year. So, which is not the purpose? To establish an Insolvency and Bankruptcy Board of India and for matters connected therewith or incidental thereto. So, board to be established. Was this not the purpose? To consolidate and amend the laws relating to reorganization and insolvency resolution of the corporate persons, partnership firms and individuals in a time-bound manner for maximization of value of assets of such persons. To promote entrepreneurship, availability of credit and balance of interest of all the stakeholders, including alterations in the order of priority of payment of government dues. To boost the recovery of the then on-performing advances accounts of the banks and the financial institutions. So which was not the purpose over here? Big options, but which was not the purpose? In fact, when I said one of the question was from May 25, this one, okay, it was there. It was asked in a different format, but logic of that question was this. So now, tell me, which of them is not the purpose? Quite simple, promote entrepreneurship, isn't it? This is not the job of IBC, isn't it? Promote entrepreneurship. So this is the right answer. To promote entrepreneurship is not the purpose of your IBC. Got it? The provisions of IBC. IBC means, see, I'll just call it IBC now. Okay, not full name. So IBC shall not apply to. So IBC does not apply to whom? Financial providers like banks, limited liability partnership firms and individual. So whom does it not apply to? See, for that you need to first understand what the IBC. IBC has 3 parts. IBC has 3 parts. Okay, kindly note. 3 parts. Which are the parts? Okay. Part 1 gives the definitions. Okay. Part 2 describes your companies, big companies. Big companies means banks, LLP. These are defined in part 2. Private limited, limited companies. Okay. Companies are defined. Companies. And part 3 defines smaller companies. Partnership firm. Proprietorship. Proprietorship is also defined in this. Partnership. Proprietorship. That is also defined. Big words here. So these are the 3 parts of IBC. But what is not defined then? Individual is not defined. Individual doesn't have any, means the loans are not covered under this, means individual loans. Only related to companies they are covered. The companies can be anything. Okay? So individual is not covered. The provision of the code shall apply, means which code? IBC. The provision of the IBC code shall apply to corporate person, individual and partnership firm in relation to their cases may be. Means for what this code is applied? IBC is applied for what? When will I go to any company and just apply it? If any company is running good, shall I go and apply this code to them? No, I will not apply. This shall only apply in the cases of liquidation, voluntary liquidation. So liquidation and voluntary liquidation. What is voluntary liquidation? See, liquidations are of 2 types. One is pressed or pressurized by the banks and FIs. Some company is not performing, then it is not resolving also, means the resolution is also not done. In that case, what happens? The banks and the FIs, financial institutions, they'll say that, okay, sell this company, sell the assets. So that is forced liquidation. What is voluntary liquidation? Voluntary means the company itself says, it can go to this IBC and say that, see, I want to close my company, liquidate it voluntarily. That can also happen. It wants to sell it. Second is bankruptcy. That is also true. If any company becomes bankrupt, gone then. Insolvency, both. These both are roughly same. So the answer is same. All of the above. See, kindly note, insolvency and bankruptcy, what is the difference? There is hardly any difference. Insolvency means your illiquidity becomes so high, your illiquidity, you don't have liquid cash to make the payments, but it becomes so high that you become insolvent. You are not able to pay the debts. And what is bankruptcy then? Bankruptcy means that it's actually a certificate. See, understand, bankruptcy is a certificate of insolvency. It's like some person is mentally not well. So I'll say that person is, let's say, insolvent. Example, analogy I am drawing. Insolvent. But when the doctor gives the certificate that this person is not mentally well, then that becomes bankruptcy. Certificate. Okay? You are alive, but where is your life certificate? You ask in the banks, right? Nowadays it's not there, but it was there earlier. So next. Insolvency commencement date means, what is the commencement date? Insolvency commencement. These are now the technical questions. These are the important technical questions and these will be asked in the exam. All these will be there in the exam. Insolvency commencement date means, when do we say that the insolvency process has started? What are the options? The date when the adjudicating authority makes award. Award means he gives the final ruling. That's it, done. Makes an award. Is it so? Second, the date when the resolution professional is appointed by the committee of creditors. So RP is appointed. There are various terms now. That's why follow the paid classes in this. RA is there. Okay, information memorandum is there. Then RP is there, resolution professional. IRP is there, interim resolution professional. COC is there, committee of creditors. These are just 5-6 names I am taking. There are almost 12 to 13 names and short forms. follow the paid classes for this. It's not that simple. Okay. The date when the RP is appointed by the committee of creditors. Third one, the date of admission of an application for initiating corporate insolvency resolution process by the adjudicating authority. So date of admission, when the case gets admitted for this IBC. Admitted. I am the company. I go to the IBC and say, see, this is my case. They take it, put it in their register, admitted. The date when the adjudicating authority issues the summons to the parties. So which one is correct over here? Think over it. A, B, C, D. Mark this as A, B, C, D. Which one is correct over here? C. Correct. C is the correct one. Admission. The date of admission is known as the insolvency commencement. There is one more. Now technical term which will come now in the same today only. So date of admission. Got it? Operational creditor means, I'll give you in simple words. Operational creditor means supplier. Simple. Supplier. The one who has supplied you the goods. There are two types of creditors. One is operational, second is financial. Okay, operational. So this is the operational creditor. Ops, I'll write it. Okay. Second is financial creditor. Financial. Financial creditor means banks and FIs. Banks. And NBFCs, I'll write it. Okay. NBFCs. So who give the finance only? Okay. So operational creditor and financial creditor. Financial creditor will give only finance. It won't look into the operations. Operational creditor means he will supply the material. He or she will supply the material. Okay. So that is known as operational creditor. So what is the answer? A person to whom operational debt is owed. Okay. Debt is owed. Whom do I owe a debt to my supplier? Yes, I owe. Because he is supplying me with the goods on udhari, credit. Understand what I was talking of? Here I am supplying, there is one supplier who is giving me, you understand, this is the simple logic of your operational creditor. He is giving me goods and payment. I am the buyer. Okay, buyer. Payment is to be done after 90 days. Let's say 90 days. Rupees. Okay. So, here look at this. This person is the supplier. I am the buyer. So, here 90 days payment. It means that I am paying him after 90 days means paying in udhari. So, this, do I owe a debt to this supplier? Yes. So, this is true. A person to whom operational debt is owed. Okay. To a person to whom operational debt is owed. Again the same. So that is also true. Same. A person to whom operational debt has been legally assigned. Now what is this third one? Legally assigned. This is known as judgment debtor and judgment creditor. Okay. Judgment debtor and judgment creditor. This is appointed by the court or the IBC or any agency. It can be DRT, it can be Surface Act, it can be IBC, anything. Depending on the level of that company. Okay. So operational debt has been legally assigned. So that is also true. So the answer is all of the above. Okay. D is the answer. Correct. D is the answer over here. Got it everyone? D is the answer. Clear? Next. Initiation date under IBC 2016 means initiation date. What is initiation? Technical term. Okay. Date on which the interim resolution professional is appointed. Date on which the IRP, interim resolution professional, is appointed. Okay. Second, date on which AA, I'll just write the short form now. AA accepts the corporate insolvency resolution process. AA accepts. Date of the acceptances by the AA. Date on which the AA makes award. date on which the financial creditor, corporate applicant or operational creditor as the case may be makes an application to the AA for initiating the corporate insolvency resolution process. Makes an application means anybody, anyone, let it be the company or the bank, anyone makes the application to the AA for admitting the case. Okay, a corporate insolvency process means case for this IRP. So which is the true one over here? Is it B or is it D? Only B and D. Is it B or is it D? The answer is D. Okay, D. The date on which the financial creditor means bank or corporate applicant or any operational creditor as the case may be makes an application to the AA for initiating the corporate insolvency resolution process. Got it? So this is the meaning of initiation date. A resolution plan under IBC has the following meaning. So resolution plan means what? This chapter is very important. Okay, stressed assets, resolution of stressed assets and IBC. Very, very important. So what is the resolution plan? A plan approved by the AA, adjudicating authority. A plan proposed by the resolution applicant RA for insolvency and insolvency resolution of the corporate debtor as a going concern. Plan accepted by the committee of creditors. Plan proposed by any person for insolvency resolution for corporate debtor as a going concern. So again, ABCD, what is the option? Kindly note, this D option is by any person is not the right answer. Tomorrow anyone will come and say, I have a plan, but do you have a caliber? First, plan is separate. Do you have a caliber? I'll go and tomorrow say, I can run Kingfisher Airlines, which has gone into insolvency. Do I have a caliber? Do I have the money? So this is out. Okay? So this is not there. Plan accepted by committee of creditors. That is also not the one. Accepted is not called as resolution plan. This is the right one. Plan proposed by resolution applicant. Now who is the resolution applicant? He is a prospective buyer. Okay, prospective buyer. That buyer means he is ready to take over that company and then run it. For that he has a plan. He has step-by-step plan. Not only plan, it's not only vision. It's step-by-step. Per step, what will I do? That is known as a plan proposed by the RA or new buyer for insolvency resolution of the corporate debtor as a going concern. Okay? Right? So now, before going, everyone, kindly join the Adda 24/7 new Power Pack revision batches ASAP. Just started there. Power Pack revision batch. Join it ASAP. All the numericals and case studies are covered. Important theories are covered. Handouts are given. You can definitely see it is for all the subjects. So you can definitely clear the paper. Even ABM you can clear in the remaining days just by reading the handouts and following the case studies. For that, what you have to do, download the Adda 24/7 app, available on both, okay? And iPhone and as well as Android. Download it right now, because by that you will be getting 1% extra discount by just downloading. You will be covering mock test, ebooks, online classes, recorded sessions. Everything is there. Case studies are covered in the classes. Important theory parts are covered. Numericals are covered. So join ASAP and use the code Y432. Y432. Okay? 80% discount plus 1% through the app. So 81% discount. Join it ASAP. BFM is still coming. Right? For BFM it will be most useful, for ABM also. Remaining 4-5 days you can definitely clear. Okay? Don't forget the code Y432.